Welcome everyone, good morning. We're going to get right into the stock market charts. On this video I cover stock market technical analysis, and really what I'm trying to do as a trader is point out what I'm seeing in the charts based on the technicals and really anticipate where the trades are going to go. Oftentimes I'll let you know my thoughts on where I think a stock or a sector is going to go based on what I see in the charts. And then we just kind of evaluate that as time goes to confirm or deny that assumption. Again, trading is all about risk reward. So it's not really about really knowing exactly where a stock is going to go. It's about looking at the chart, seeing where it's likely to go, and then trading that appropriately, managing your trade, taking good trades that have a favorable risk reward ratio. You never want to take a trade that has, a potential to gain a little bit and lose a lot. You always want to take a trade with kind of the opposite, the potential to lose a lot and gain or lose a little and gain a lot. And that's really what this channel is about. So if you're new, leave me a thumbs up and check out my trading course. I do charge $99 for it. I'm not going to really ever put it on sale, but at the same time, I'm not really going to raise the price either. I'm going to just kind of leave it there. It's affordable and accessible for most people to learn some new skills in the markets. Check that out. Link is in the description below. All right, getting into the charts. So we've got the Fed reporting today at 11 o'clock Pacific time and 2 o'clock Eastern time. The Fed is likely going to move the markets. The Fed is responsible for the most part for moving these markets over the last few years, really. And so I think it's important to pay attention to what happens with the price action today. Now, I just want to talk about that real quick, and then we'll get into the charts. The Fed, basically what the market is expecting is the market doesn't want to hear the Fed pull back the stimulus or the easy money policy. And the Fed has promised to keep the easy money policy going. If the Fed kind of continues, so here's what I'm looking for. If the Fed continues to say that the inflation that we're seeing is transitory, meaning that it's just temporary and it's not, we're not going to continue inflating prices, then likely the market is going to be okay. But you really should see the gold stocks and gold in general really spike on that. The easy money policy is bullish for gold because it just continues to devalue the dollar. All right, so we're going to watch for that and see what the Fed does. Now, if the Fed hints at some sort of tapering, whether it's tapering of their bond purchasing program or maybe raising rates a little bit sooner than the market had expected, because right now I think they're pricing something out to 2024 is the first rate hike, but maybe a little bit sooner than the market had expected. Look for the markets to sell off, all right, especially tech. All right, so that's how we're going to play that. The two things to watch that I feel like is gold and tech, and we'll kind of figure out which way those are going to move. One of those should move, so we're going to watch those. Now, cues. Going into the charts on this hourly chart, I've got this upward trend line right here, and basically we're starting to break it again today. You can see we've started to roll over. Now it's pre-Fed, so I don't like to take anything pre-Fed. It is a breakdown of this hourly chart, so we could continue to sell off after the Fed. Or the Fed could come out and they could pop it right up to resistance right there and then sell off. So we're going to watch that. But that trend line right there, I think, is in play, and we'll just continue to watch that on the hourly chart. On the daily chart, you can see, we basically just extended the negative divergence right here. We made a slightly new high, just barely, basically an equal high to the former high, which is right here. And yet, if you look at the PPO and the RSI, you'll see if I just move that over right there, that's on lower momentum. So the negative divergence is still there. You can see the PPO starting to turn down and cross bearish, and the RSI's really started to turn down. So there's your negative divergence. See how the momentum is just trending down? Even when you run up and make a new high in price, the momentum isn't able to replicate that. And so that's a divergent high right there, which means there's a high likelihood of failure, which tells me that I think the markets are going to sell off at, after the Fed. Maybe they don't sell off right at the Fed announcement, but I think after the Fed, maybe the end, into the close of the week and next week, we're going to sell off. I just think that because of the divergence, the negative divergence. I could be wrong. We need to see what kind of starts to happen. But, we did just put in another divergent high, which I think has a high probability of failing. Where do we go? Well, the one thing I'm looking for on the hourly is, I'm kind of looking for a break of this level right down here. It's about, it's really about right there. You could probably drag it down a little lower. Yeah, we'll call it right there. I'm looking for a break of that level at about 334. All right, an hourly close, especially an impulsive hourly close below that, where you see it just start to really break down. That's going to be my sell signal and my trigger to get short on the triple Qs. All right. And the NASDAQ futures, here's kind of the corresponding level right there. It's about 13,730. Looking for an impulsive breakdown from that level. You can see we hit that, we really hit it twice here, held. So I'm looking for a break of that to trigger the next sell signal. Now, I don't trade futures. I trade the ETFs, but that's the corresponding level to look for. SPY. So SPY on the hourly chart was walking up this trend line right here, and we broke the other day, and really all we've been doing is backtesting the last, really since April 20th. So we broke, backtest, broke down again, backtest, and then look at the price action lately. It's just sideways. So obviously the market's waiting for the Fed pretty much all week. It's really gone nowhere. It's just chopped around sideways. It's been a really quiet week for me. I haven't done a whole lot of trading. Just with the FANG earnings and the Fed, it's really, for me, it's kind of a wait and see week. And so we're getting the Fed today, and we'll start to see what the market wants to do after that. But we are below this hourly trend. If you look at the daily, on the daily, again, negative divergence remains. So let me just get rid of some of these marks here, these old circles. But I was just showing that, we had negative divergence. So here on the daily, you can see we just creeped up this week, made a slightly marginal new high, just barely, right there, just barely a new high. And on the PPO, it was a divergent high. See how we're just continuing to downtrend? So that's how these divergences work. Divergences build and they build and they build, and prices continue to kind of grind higher, slowly grind higher. And then all of a sudden they break, and they break fast typically. So that's why I'm looking for more down. I think the opportunity to the downside is better than the upside, because yes, you could be long and it's grinding higher, and you're seeing small gains day in and day out. But when it breaks, it's not really a matter of if it breaks. You will have corrections, but when it breaks, it's going to wipe out a lot of these gains very quickly. And I could easily see a sell down and really wipe out all these gains right here, selling down to, down to about 400, 402, somewhere right in there, 404. Let me get rid of this blue line here. Down here, about, 404 or so. It doesn't mean, that's not going to happen in one day, but it could take, a couple days or so. And, I don't want to be long, or I don't want to go long, especially with new positions when you have negative divergence starting to show up. So really what I'm looking for on this one in the hourly chart is, I'm really watching the Qs, but you also have kind of a corresponding level here at about 410.90, looking for an impulsive breakdown of that. We get a breakdown of that, and I think we're likely going down to 403, 404, and potentially lower, but we'll continue to just kind of watch that. Oh, sorry, not 403, 404. Yeah, well, I think we'll likely, here's a gap right here, so I think we'll likely head down, fill the gap at 400, and then probably continue lower, looking like we'll probably go down to, if I can get my trend lines catching up, yeah, about 403 or so before we potentially get somewhat of a bounce. And I haven't talked about bonds for a while because they've kind of just been going sideways. But because it's Fed day, we need to watch these rates. So you can use TNX. That will give you the 10-year Treasury interest rate. And right now we're sitting at 1.64. Again, the higher rates go, the more pressure that should put on the markets in general, and especially tech. So watch for a spike in rates, after the Fed. I'm not saying that's what's going to happen, but if that is what happens, you should see tech sell off with that. And again, the interest rates aren't too far off of, the recent highs that we've been in. And yet tech, if you go out to tech, it's kind of rallied and made a new high. So there, I think tech is a little bit ahead of its skis up at these levels. And, I am looking for a sell-off. But again, I pointed out the levels I'm looking for to trigger a short on those trades. And so we'll watch that, but watch the interest rates. Now, gold. We want to keep an eye on gold. So here's gold bullion. And again, 1790 is the major resistance level that we're really tracking. That goes all the way back. If I look at the weekly, I've talked about this level for probably a year now. But if I go back to this is a weekly chart. So looking at the 2011 through 12, 13 area, you can see this was major resistance. We overshot it. There was no trend or resistance at this point. So we overshot it, sold off, and then came back. It held at resistance, tested it again, tested it a third time, and then that was all she wrote. That was a failure. And then gold went into a bear market. We've now come out of that bear market, and we have broke out. Here's your breakout. See how it got impulsive, right? Once you got above that level, the price action started to get pretty parabolic and impulsive. That's a confirming breakout. Now we've had a correction in gold. We've been correcting over since July of 2020. And perhaps we're not finished with the correction. That's always a possibility. We could have another leg down. I'm open to that. But we did start to put in some bullish divergence down at the lows here on the daily chart, signaling we were likely going to start to get that trend reversal. Now we're right there at 1790. That's the level of major resistance. So a break above that, and I've got this trend line up here, but I don't think it's super valid. I've only got 2 data points. But I think it really looks more like this. You break above that 1790 and you're really starting the next leg higher. Going back to the weekly, I just want to point out sometimes I don't talk about the larger patterns. I used to talk about these larger patterns all the time. But the larger pattern, you'll see I've kind of got it drawn out right here with this little squiggly line. It's really forming what it used to be a rounding bottom. And that's a consolidation pattern where when you go into a bear market and you start to create that rounding bottom, it's a big accumulation pattern where people are building positions and there's buyers down there. And that's what this big long pattern in gold was, a multi-year pattern. And then finally you break out. Now that the rounding bottom has started to kind of play out, it really formed what is a cup and handle. So a cup and handle is you've got the cup, so you see the cup right here, and then you create this handle, and then really what you look for is a break pretty much out of the handle, something like this. Basically a breakout from the handle, and you're going to project a move from the bottom of the cup to the top of the cup. So that's really going to put us, we'll say the top of the cup's right about, it's right about there really. And I was drawing this line right here trying to measure it. But it's right there, and that is a move of about $850. So, we would project a move from here, with a breakout, when you actually get the breakout, up $850. So that's going to put us in the, $2,500, $2,600, $2,700 range for gold if we get that breakout and it plays out. And obviously the miners are going to run quite a bit if that happens. So we're watching that. That's kind of a larger picture stuff. But 1790, that's the level we're really tracking right now. And just a real quick scan of some of these gold miners, because I do think they're one of the sectors and these stocks are really in play, especially with the Fed today. AEM, coming down to what looks like support. We're still kind of above it. So we'll see. This kind of no man's land, but really looking for a break of this downtrend line. I think we're going to get it. Look at Barrick Gold. Came down to this support level right here at 2130. There was a gap right there. That was former resistance. You can see we broke down here, tagged it as resistance, tagged it, and then we broke out to the upside, come back down for a back test right there, and we're holding. So again, holding support. I'm looking for a move higher. What else looks interesting? Wheat and precious metals, WPM. You can see here's your downtrend line that we broke out from. So you break out, come back in, back test. So, the Fed obviously has the potential to foil this. If they come out and they are more hawkish, then gold could break down here, and this could be a false breakout. But as of right now, it's bouncing off support, and I think it's likely going to move higher. Let's see. That one's here's I am gold. You can see right there, downtrend line on, that was former resistance. We broke out recently, came back down, back test of the trend line, and we're bouncing off of that. So that's kind of how a lot of these look. They look like they've come down, they hit their, they hit their support line. Here's BTG. You've got some support right there at 4. We hit it this morning. It's about 489, and you can see right there, tagged it, and we're bouncing off of that. So watch gold. That's going to be important. Okay, so here's AMD. They reported earnings after the bell yesterday. Positive earnings. They were up about 5%, I think, in the aftermarket. But yet, here's just kind of a lesson. Here's a lesson in the aftermarket. All right, the aftermarket is not it's not heavily traded by institutional investors. It's not where the big money is usually traded at. The aftermarket is usually very thinly traded. You're not going to have a big institution come lay down a position in the after hours. There's no liquidity, so they can't get a good size position, where they can really take a stand or a directional trade. So they wait till the regular market hours, and that's when they trade. And what they did this morning when the market opened and it was up 5% is they sold this thing off. So it just, that price action, at least today, is bearish, where you come out with good earnings and they sell into it. Doesn't mean it's going to stick. One day doesn't make a trend, but we'll continue to look for more selling to help confirm. Another thing on AMD that I really see is we're just continuing below this major trend line here on going back to 2016. So there's your trend line. We broke that, back tested once. They, earnings came out and still couldn't get a back test, another back test, but they're selling into it. Negative divergence still remains. There it is right there. You can see, all this price action way up here was divergent highs, signaling a trend reversal is likely. We then broke trend line support, and I think we're as far as I can tell, we've started a downtrend, and I think we're likely going to work our way down to $59. So that continues to be my target. I'm still short this thing. Everything still looks like it's intact. Microsoft selling off today after earnings. They reported their most profitable quarter ever, I believe, and yet the market's selling it. The thing is that everybody's long Microsoft. So it's a crowded trade. When everybody's long one thing, and even when good news comes out, there's nobody left to buy. Everybody owns as much Microsoft as they really can or want to. And so, you get good news, people sell into that. And that's what we're seeing. So we'll see how Microsoft closes the day. If it closes below, right now on the hourly, I've got this, this little bit of a support right here that's been broke at about 255.67. And if we continue to sell off, then I think we're heading down to, we're likely going down to about 245. That's probably your next level of support, and we'll see how things play out from there. Again, I'm watching the Qs. We'll watch the other FANGs, see how they come out, because Microsoft will move around with the other FANGs. Google is up today. We'll see how it closes, though. Here's the daily on Google, and you can see we have this upward price channel right here. We're above that right now today. Again, the Fed's coming out at 11. They might sink this thing and bring it back down within this trading range, this trend line. That would be bearish because this is a breakout today, and if it comes back in and closes back below this trend line right here, that's a failed breakout. To me, that would say that Google's likely going to trade all the way down to the bottom of the channel, which is, right now could be, I don't know, down at 2020 or something like that. And that could be a drop, you know, depending on that, of 14, 15%, you know, 10%, something like that. Those are hypotheticals, you know. But if you look at Google, negative divergence remains. See the PPO, see that how we're, you know, still making lower highs. Now, we're not turned down yet, but we'll see what happens with the Fed. Here's the RSI, slight negative divergence right there as well. Not confirmed completely, because if you zoom in, you can see the RSI is pointed up right now. You want to see this start to point down to confirm, but likely the Fed's going to, you know, have an impact on what that does. You can see coffee running up another 0.5% today. Continues to look good to the upside. So coffee, the 45, it's about 45.64 is your next level of resistance. We had a reaction high right there. And yeah, that's kind of what I'm looking for, but I still think there's probably more upside. These commodities, when I look at these, like if you go to wheat and you roll back and look at the bigger picture, which is important, you can see this thing's been in a bear market for many, many years, really going back to 2012, you know, a 9-year bear market, and we're just starting to come off the bottom. And so to me, it looks like we're likely starting a new bull market in commodities. So corn, you know, same thing. You know, it's been in a bear market, starting to rip higher. Now, I think these probably are due for a pullback, but I'm really more interested in going long these ag commodities on pullbacks to support. So with Joe, and the chart with Joe doesn't go back as long because they changed the ETF name from they changed it to Joe, and so the history of this exact ETF doesn't go back as far. But coffee, there was another ETF, I don't remember the name off the top of my head, but it's, you know, very similar. This is basically at the bottom of a 10-year bull market, or bear market, sorry. And so, you know, even if we run up to this 45.60 area, yeah, I think it's likely we'll get some sort of a reaction or pullback. But I'm really more interested in staying long this thing and adding to pullbacks and potentially just trailing stops up. If we're going to start a new bull market in these ag commodities, the easiest trade would be to just add to a long position on pullbacks to support. And if we get a real strong rip higher and we start to get negative divergences show up, then I'll look for, you know, opportunities to exit and maybe recycle in after a correction. But, you know, negative divergence would show up when we're going to get that correction potential. So I'm not really interested in getting out of this until I start to see signs that we're going to have some sort of a, you know, multi-month correction that you can just step aside, let it correct, and then we can get back in at a later time. As of right now, this looks like it's just starting to run higher. And I'm going to wrap up with this Boyd Gaming. Somebody asked me about this and whether I still think it's a good short. So, this was never a short trade, something that you would just short. I didn't say I was shorting this or that it was an actual actionable trade, just a setup. And the setup that I saw is still, it really is still there. You can see here negative divergence on the daily, on the RSI. The PPO has slight negative divergence here. And obviously you could extend it out to there and you'd have clear negative divergence. And we have a clean uptrend line. And, you know, earnings came out. It opened up way up here at 70.97. They've been selling it off since. And so what I would be looking for, because when it opened and gapped up, that was a divergent high, and those have a high probability of failing. So far, that has failed. The sellers have stepped in and sold it down. The trade on this comes when you break this trend line. All right, we have the negative setup. We don't have a trade trigger or anything that tells us a sell signal, basically. So the trade is when you get a break of this trend line. And if we break, then I think we're heading down to, you know, about $39, kind of in this area right here. So it's a trade setup, not an actionable trade. I'm just keeping an eye on it, and if we get something, then, you know, I'll point it out on the channel. All right, guys, that's all I got. Thank you. Fed's out today here in just a little bit, so stay on your toes. And if anything crazy happens, I'll put out a video at the end of the day. All right, catch you guys on the next one. Bye.